You know, there is a totally brutal statistic in the financial markets that, well, frankly, nobody really wants to talk about. It's like this massive elephant in the room, the silent account killer. And honestly, it's the exact reason why so many people just walk away from trading feeling completely defeated. So welcome to this explainer. Today we're going to unpack something very real, very harsh, but, and here's the good news, completely avoidable once you have the right framework. We're looking at the realities of risk, the traps that catch almost everyone, and the specific blueprint you need to actually survive.
Okay, let's dive into this because there's a fundamental truth here that completely flips the trading paradigm on its head, right? So many people out there are just obsessed with finding that perfect technical indicator, the holy grail of chart patterns, or that flawless entry signal. They think their failure is just a technical analysis problem. But the secret? It's not, because they can't read the charts. It's not the charts at all. It is the risk. The core thesis we're breaking down today is that your ability to analyze a chart is totally secondary to your ability to manage your capital. If you get the risk wrong, the best chart reading in the world just isn't going to save you.
Section 1. The brutal 90-90-90 rule. This is the statistic that major brokerages know all too well.
So we start with the first piece of this devastating puzzle, 90%. This represents 90% of retail traders. Just pause and think about the sheer volume that number represents for a second. Almost everyone who opens a retail brokerage account and decides, hey, I'm going to take on the financial markets, falls right into this exact category. We aren't talking about a small, unlucky minority here. We are talking about the vast, overwhelming majority of participants.
And now we hit the consequence. That overwhelming majority of traders, that first 90%, they go on to lose 90% of their money. Let that sink in. This isn't just a minor drawdowner, a bad week in the markets. This is absolute capital destruction. Losing 90% of your account? That means you are effectively wiped out. It means the capital you worked so hard to save and deposit is essentially just gone, leaving you with barely a fraction of your starting balance.
And here is the final brutal nail in the coffin, 90 days. Major brokerages know for a fact that 90% of retail traders will lose 90% of their capital within their very first 90 days, 3 months. That is literally all it takes for the market to chew up and spit out the vast majority of new participants. This massive capital wipeout happens incredibly fast. But the real question we have to ask ourselves is, why? Why does it happen so quickly and to so many people?
Section 2, the casino mentality trap, why so many accounts get completely wiped out before they even get started.
The real issue here is a fundamental behavioral flaw. They treat the market like a casino. When people approach the markets hoping to get rich quick, their entire psychology shifts. They go from being an analyst or a business owner to just being a gambler. Instead of managing risk and thinking about long-term survival, they view every single trade as a pull on a slot machine. They want the big payout and they want it right now, which naturally leads them to make absolutely catastrophic sizing decisions.
And this brilliantly illustrates the problem. When someone's trying to get rich quick, they'll regularly risk 10 or even 20% of their account on a single trade. Now, losing streaks are entirely normal in trading, right? It happens to everyone. But when a gambler hits a totally normal 5-trade losing streak while risking 20%, well, trade 1, boom, a huge chunk is gone. Trade 2, trade 3, by trade 5, the account is completely wiped out. The math simply does not allow you to survive a normal losing streak when your risk is dialed up that high. It's practically impossible.
Now, what's really interesting about this is the stark contrast between these two mindsets. On one side, you have the gambler. They risk 10 to 20% because they're chasing that get-rich-quick dopamine hit. Their fate is pretty much already sealed by the math of the 90-90-90 rule. But on the other side, you have the professional. The professional isn't trying to get rich on a random Tuesday. They're trying to survive until next year. They follow a strict blueprint and they cap their risk at a totally different level.
Section 3. The 1% rule. Your absolute blueprint for market survival.
The 1% rule. Look, if you want to survive, you need a blueprint. And this right here is the foundation of the whole shebang. Never, ever risk more than 1% of your account on a single setup. I know, it sounds small. To the gambler, it probably sounds boring. But this single percentage point is literally the absolute difference between blowing up your account in 90 days and actually staying in the game long enough to learn how to be profitable.
So the crucial point is the mathematics of survival, and they are incredibly clear. If you follow the 1% rule, you could hit a devastating 10-trade losing streak. You can lose 10 times in a row, and yet at the end of that terrible streak, you still have roughly 90% of your starting capital left. You're still in the game. You might be a little bruised, sure, but you have the capital left to fight tomorrow. You've protected your downside, completely neutralizing that 90-90-90 trap. So here is your action plan to implement this immediately. Step 1, stop gambling. You have to consciously reject that casino mentality and the urge to get rich quick. Step 2, build a blueprint. Decide right now that the 1% rule is your unbreakable law. And step 3, if you want the complete breakdown on how to start acting like a professional, I actually just dropped the full guide to beating the 90-90-90 rule. You can tap the link in our bio to read the full thing right now on our Substack.
Ultimately, it all comes down to the choice you make before you execute your very next setup. You know the statistics now, right? You know exactly what the brokerages are fully expecting you to do. So look at this question. Will you gamble 20% tomorrow and become just another part of the 90-90-90 statistic? Or will you protect your capital and survive with 1%? The choice, and your entire future in the markets, is entirely up to you.